retirement, one of the biggest liabilities that we find for a lot of individuals going into retirement is taxes. And I know everyone wants to pay less taxes, but if we look at our country and some things that are going on, I want to talk a little bit about the likelihood. Are taxes going to go down, or are they going to go up?
In the future?
Yeah. Can you spend a little time talking about maybe the history of taxes?
Sure, yeah. Before we can talk about the future, it makes sense to talk about the past. And, if you follow us here on the show, we've talked about it in the past. We existed a long time as a country without any federal income tax.
Yeah.
It wasn't until 1913 that we actually started paying federal income taxes. So we got along a really long time without any income taxes. And it's interesting, if you go back to 1912 when they were voting on this, Congress, basically what they said was we had some debt left over from one of our wars and they wanted to get it paid off. So they said that they wanted to have a temporary
It's going to go
income.
away.
It was going to go away.
Just for a little while.
We're going to pay off the war debt and we're going to go away. So it's going to be a temporary income tax, and the top federal tax bracket would never be greater than 5%. That was going to be the highest. For the highest income earners, they would be paying 5%. So obviously we know that they didn't keep their word back then, just like politicians might not keep their word today. But if you fast forward to today, obviously we're in a higher income tax bracket than they ever promised us. But historically speaking, really, if you go look at the history of taxes all the way back to 1913, today we're in one of the lowest income tax environments we've ever seen. The top federal bracket has been as high for the highest income earners, but it's been as high as 94%. And it actually, through the 50s and 60s, the top federal bracket spent an entire decade at 90% or above. And again, obviously I'm talking about the highest income earners, but if the highest bracket's been that high, the other marginal brackets have been much higher as well.
On that topic, I was reading a story about Ronald Reagan, and when he used to be an actor out in California, he would only shoot one movie a year. Because if he shot two, he would actually make less money because of taxes. So, yeah, I mean, that totally makes sense.
Yeah, just go shoot a movie and take the rest of the year off because you're just working for the government after that.
So I think that's why he went into politics, is because of that
scenario. I think so. I think I read the same thing. So, well, Jordan, what do you think? You're probably the youngest individual here on the couch with this. Do you think in the future that taxes are going to be higher or lower than what they are right now?
Oh, Matt, it makes sense that the taxes are probably going to have to be higher in the future. I mean, if we look at all of the debt that we're accumulating, our deficit, I was actually reading somewhere about a week ago that they were saying that the average taxpayer has to pay about $1 million just to cover the cost of the debt if we were to resolve all of it right now. And it just seems likely that in the future we'll probably have to pay more taxes.
Right. Well, obviously if you take a look at the debt clock, everybody's probably seen that website. We'll show it here today. It's 19 trillion, soon to be $20 trillion. And we're still running some budget deficits. So at some point, you don't necessarily have to pay it all back, but at some point you have to start paying some of it back. So I think the likelihood that tax rates will go higher in the future versus where we are right now are probably pretty good. And where that gets concerning is that a lot of individuals that are out there, I know they're putting money into things like 401ks, 403bs, IRAs, and they're taking a tax deduction on those dollars right now, and they're hoping that when they retire in the future that they'll be retiring into a lower income tax bracket, right? That's always the goal. And we see right now, even with tax rates being about as low as they've ever been, that really isn't the case. And I think that you could probably make a pretty strong argument that in the future, tax rates will be higher than where we are right now. Regardless of who controls the White House or Congress, moving forward, I think tax rates are probably going to have to go up for everybody. If you take a look at the current debt situation, you have the unfunded liabilities, there's just not enough revenue coming into the government to cover everything that we've promised. So one of the things I know that I talk a lot with my clients when I meet with them is we need to find ways to start to transition as much money as we can now. We can't wait until tax rates go up, it'll be too late, but transition as much money as we can now into tax-free options and tax-free accounts.
While the taxes are still relatively low. And while you know what they are. So I think that's important as well, is to know so you can plan. Because if you don't know where taxes are going in the future, if you think you need $3,000 a month or $4,000, you don't know what you're really going to need pre-tax. So I think it is very important to start transitioning, like you said, over to tax-free.
And for a retiree, really their tax burden is pretty much their number one expense.
That's right.
Their number one expense. Maybe followed closely by medical expenses, but for most individuals, it's how much they're paying in tax is the most important factor. So Jordan, what are some different tax-free options individuals should maybe consider right now before tax rates go higher?
There's a few different options. A really good option could be a Roth IRA. I know not everybody qualifies for that, but a Roth IRA is great. Start to transition those monies into tax-free. Another option too are municipal bonds. But again, like we talk a lot about with interest rates right now being at historic or all-time lows or very close to it, the rates on those are maybe somewhere between about 2 to 3% per year. I don't know if that's anything to get excited about.
Right.
Maybe for a high net worth individual or a high income earner, 2 to 3% could be attractive. Those are kind of two of the other options.
Okay. Yeah, so the Roth IRA is great if you qualify for it, but unfortunately, income limitations, not everybody can use it. But if you can use it, it's something that we like a lot.
Yeah.
Obviously, you're limited to how much you can contribute to it, so you've got to look at some other alternatives, maybe municipals, but right now, like you said, interest rates are a little too low. Anything else that you're talking to individuals about?
Yeah, there's some non-qualified deferred comp plans that you can build for yourself. There's several strategies that you can build if you know now that you're trying to save taxes in the future. So as long as you put some things into place and you're using the right tools, there's definitely some strategies you can use to transition to tax.
Well, I think one of the most beneficial things we can do for individuals and viewers watching right now is we can do an analysis on your situation. So rather than waiting before tax rates go higher in the future, like they most likely will, you can take advantage of the low tax environment that we're in currently and try and make sure that as we move forward, regardless of what happens with tax rates, you're able to pull that money out in a tax efficient manner.